The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 11th day of October. This isn't October the 19th, 1987, but yesterday felt, well, it was interesting, 800 points down. October the 19th, 1987 was 506 points down. That was the first time we had seen anything like that. It was a 20%, I think, correction in one day. But that was after 6 weeks of a top. So there's a lot of differences here. A lot that I want to go through. The Dow made its high at 26,951 on the 3rd, 7-8 days ago, with a little doji candle and a peak E, but it was a leg E on that day, but it gave clues because it was inside. Let me just move this a little bit and you'll see. It was in this up channel, little mini up channel, and it had an inside track. That's a little tiny channel within the channel at the top, little channel at the bottom. The one at the top is often treated as a repellent zone, and the one at the bottom is a propellant zone. And it got right into that. In fact, the day of the high of the 3rd, it had the low on the dashed red line and the high just a fraction above the dashed green line. Well, that was a clue to me to say the stochastic was much lower at this high than it had made the high of the 21st of September. And that there was a real good chance that we were about to make some kind of a top today. And over the years, many times at a peak D or E, that's where we've gone short. We went short just immediately after this particular doji candle high of the 21st was correct for a move down. Then we got the move up, and now I want you to do short. So we went short right at the opening. That Thursday, I believe it was, the 4th, and remained short. Now, what's the big deal? The big deal is that it had everything. Look, the MACD looked good at that point. The stochastic was fading, but the price was holding way above the green this is the green, light green, 9-period moving average, and the 14-period, the black line, 14-period moving average, and it looked great. And then it had a pullback that day, and it gave a candle that I've spoken about many times. I'll just point it here. I'm not going to discuss it. On this particular thing, you see it says Chapman Wave Roman candle, the February candle of this year in the monthly chart. There's a whole connotation to that. And what I said is if there is a pullback halfway into the wick or the lower wick, and it holds for a while because the daily chart, so let's say on the 120-minute chart, be careful because you're going to go down and retest and maybe break the low. We did that. Then we repeated the same candle the following day, even bigger distance. And what happened is the 3rd day, goes down. It's this trend line that came from that peak D top to all the different highs on the way down before it gapped up and reversed. So I treated that as a support, and it hit the support level. It was also the support level of the up channel, where we had a kind of an inside day the following day, and then yesterday, kaplop. Because I had one reading that said that there was a chance that if there was any bounce, it could be a good bounce, based on the Chapman Wave trend gauge, which failed yesterday for the very first time in ages. What a day to fail. This move down accelerated with from the opening bell, it just tanked all the way down. And then today, it looked as if early in the morning it was going to be a horrible session. Instead, what happened is by the open, you had already gone positive in the S&P futures, and the Dow kind of followed, and it didn't follow for long because it plunged to a lower low. And the low I'd said to subscribers this morning is this 25,200 area. Watch that. That's going to be the next target. Why did I choose that? Because now I've just lost the chart right there. No, it wasn't that one. It was. Now I can't remember. Oh, it was a trend line, a particular trend line that I was using over here on the daily chart. There it is. So if I go to this particular chart, there it is. That trend line where I used the bottom, you remember I used the top of this dashed line right here is the top of all the candles from the peak D daily chart of the Dow at 26,769. Then I used the bottoms, and then it gave me a projection to say if it gets anywhere into the 25,200, it better hold because this is trend line support. Well, we were there, and now we've come back up above it. It's at 25,450. Wow, what a day. And up and down and up and down. So now let's go to the nitty-gritties. The nitty-gritties say that the MACD is very negative. The stochastic is at 20%. I think it's going to be in the single digits before you get a substantial turn to the upside. In the meantime, we're going to go to the VIX index soon after this. What I wanted to say is another break of the low today, the low of 25,226. That'd be very, very disheartening for the bulls, and that'll probably add to pressure to the downside. That'll say we could have a lousy day Friday. Monday, we could get a major turnaround for a 2.5 to 3.5 week rally potential before we come back down, or an arch formation and a retest. All right, got that out the way. Any move in the next 2 days above 25, let's call it 25,750, that's another 300 points up from here, would be impressive action to say, we've started that rally. I'm going to talk about what the weekly charts are doing now. This is a peak G in the weekly chart. The MACD's turned down, nearly crossed negative, hasn't yet. Stochastic still at 85%, that's good. And you got 25,783 as a 9-period moving average resistance. That monthly chart still just a leg F/B to the upside. Hey, we'll run these real quickly as we go to, before we go to break. The S&P is down 18 at 2767. Went under the 200-period moving average. It's above it now. It's not good to be testing the 27, is that 69? 2750, let's call it 2760 area as much as we're doing today. I'm going to be watching it closely because it has to bounce off this level quickly, but it is a peak G in the weekly chart. I'm pretty sure of that. QQQ, 123, down 12 cents at 171.64. It too has gone under the 200-period moving average, is sitting just above it. Weekly chart has made a peak F. I'm pretty constant. I believe that's a peak F top in the weekly chart. Monthly chart, leg F. Going to watch this one very closely. All right, let's go to the IWM. The IWM, which had been the weakest for quite a while, led the way down. Today, it's still weak. It's down 50 cents at 156. It's gone from 173 to 156 in just a straight line move in the weekly chart. That's not good. And that monthly chart is now pretty darn negative. First monthly chart we've got that's negative in the major indices. Gold is breaking out here. It's at 1224. It's gone right through the 9-period moving average of 1212. It's gone right to the weekly 1224 14-period moving average. Whopping leg B. But this is going to be very interesting because silver actually is following. Number one, silver's falling. It's not looking great, I can tell you that. But silver can move very quickly. And I mean, the weekly chart is not looking that great. It is rallying very nicely. It's up 0.30 at 1463. And the dollar, this is going to be so fascinating. Look, the dollar's down 28 cents. It's kind of holding pretty well when you think about it, but it's not looking great in the daily. It's the weekly chart that's holding in the sideways formation. We're going to see if in 3 days' time, gold is still continuing its rally, and gold is now even further on the upside. The GDX, which is the gold miners, which broke out as well, is at 1948, just touching the 14-period moving average. But this is already in leg D in the daily chart. So the MACD is good. Stochastic still very weak. So we're going to be watching this because in 3 days' time, that's going into, say, Tuesday morning. If the GDX is above 20.20, that's really good. If it's still back towards the 1910, 18.70 area, that's not so good. We'll talk about bonds when we get back. Basil Chapman, Tiger Business Hour.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So just to the 2-minute chart, let me just show you. This is so interesting. Look at it. I'm going to move it all the way to the left. From the high that was made yesterday at 3:30 in the E-mini, S&P E-mini at 2779.25 was peak D. The price just kept going down, made a lowercase h pattern, went to a lower low, hit 2747.25 this morning. I was up actually at 5, I think it was about 5:15-ish or so, Eastern time. Then it started to move from the 2447.25 low at about 2470. It really kind of held nicely, and then it started to move, went to a peak D. I used that peak D actually just before I went to the gym. No, it was afterwards. And then I use it as a pivot for the left side, possible cup formation to the right. It seemed impossible to do, but I drew it in. I drew it in with a Chapman Wave inside wedge target line. And you would not believe it. Look, within the 2 minutes, it's actually within 3 minutes, it goes to that exact level, 2779.25, surpasses it, goes to yet another D. This is the 3rd D in a row. It's actually the 4th D and 5th D in about, since yesterday, 2:30 in the afternoon. It goes to 2786.50. Starts to pull back, goes into this rectangle formation. Remember, I always say rectangle formation can last a lot longer than your patience. And then what does it do? Goes to another little mini D, pulls back, goes to a rogue wave F. Then it goes outside to the upside of the rectangle. And then from the high that was made at 2798.75, right there at about 9:50, it comes down, and what does it do? It gives back all the gains. I mean, can you believe that it goes from the 47 level to the 98? That's 50 points up, and then it comes almost 50 points down, but it goes to what? It goes to 27. This is unbelievable. 48.50. What is it? $1.25 higher? And then it starts another move, and now it's attempting yet again to start a move in a shorter time frame to try to go back at least, because I think there are people that are saying, you know what, we kind of settled from yesterday, we've been up and down, now it's time to have a little bit of a rally that could be sustained up until maybe into Friday, maybe even Monday. Maybe this is a low, that's a tradable low they can go on for maybe a week and a half, because that VIX index, which we'll get to in a moment, at 2784.25 on the left, 27.80, that's the left side, right? I don't have time to do it now, but that would come in roundabout in the next 6 or 8 minutes. That's kind of what we'd be looking at, all right? Okay, enough with that. So now what we want to do is we want to go back and we want to look at the relationship of the EUR, the USD, and I had a lot. I really had a lot of emails. Thank you to all subscribers and to a lot of people who listen. No, I didn't get everything perfect. Believe me, I didn't get it. And we weren't nearly as short as I wanted to be. We just kept missing, adding to this short side, but we were short, and that's good. So very nice. And one of the questions I had is the EU. What was the question? I'm not going to be able to do it right now, but it had to do with the EUR USD. All right. So the EUR USD, because of the gold rally and the dollar's sort of a little bit of weakness right now, we've got a new leg A in the euro dollar. And that's just a gray A. It hasn't given any signal yet. The MACD is still trying to turn around. Stochastic's lousy at 18%, but it is rallying. And the weekly chart has this arch formation fighting with a larger cup formation. And that cup formation says it's got to. It has no choice. It cannot break under 1.14. It's at 1.15, 1.157. It has to get to the 1.173 200-period moving average, and it needs to do it very quickly. And when I say very quickly, I mean it needs to do that by about Monday, Tuesday at the latest, without breaking down. So that's the euro dollar. Monthly chart still doesn't look great. Weekly chart it's fighting, and it's fighting the two. The MACD is improving a little bit. Stochastic's at 61%. That's a good sign, but it's only a good sign if price starts to match that and moves. The USD JPY. That's the yen, the dollar yen currency pair. Made a peak F top at 114.50. What was that? I didn't write it in. 114.58. 114.58. I think that was the October. I'm just going to put 10.3. I think it might have been before that. Let me just double check. No, on the 3rd. On the 3rd. And it's pulled back very sharply in a sell mode in the daily chart, leg B to the downside. Next level of support is at 112.048, and it's at 112.34, and it's at leg D in the weekly chart, possibly pretty sure it's going to be a peak D by tomorrow. MACD is good, turning down, but good. Stochastic's 83%. Turning down, but good. Relative strength is weakening. So this is going to be very important. A close next week under 110 says, you know what? Yen has bumped into serious resistance, and it's going to be testing the whole 111 to 110 area very soon. TLT, this is what I wanted to talk about. The TLT is up 72 cents. That's not a big deal. It's the start of something. I'm not sure just yet what it is, but it looks to me like if I put this together, the iShares Treasury Bond ETF together with the TBT, which is the ultra-short Lehman 20-year Treasury Bond ETF, probably making a peak F right now. I'm not 100% sure. The MACD is turned down, but still very strong. Stochastic's turned down at 82%, still pretty strong. Prices held very well above the 9-period moving average, touched it this morning. So if the TBT at 40.19, down 50 cents, breaks underneath 39.20, closes below 39 in the next 3 days, I think we've got T-bonds. Look, T-bonds could have a pretty darn good rally, and it could take about a week and a half or so before, 3 weeks maybe, and then in November maybe rates start to move back higher. But I'm just treating this as a potential counter-trend rally. Look at the TNX.X. This is the 10-year, made this peak C, G/C. I have to call it G/C now that it's pulling back a little bit. I'm watching it closely because that could become it looks the same as the TLT. The technicals are still very strong. This is an early stage. We're looking at it, and then I would still call that a peak C in the weekly chart of the 10-year Treasury note yield. Now, FXI should be rallying. China should be rallying. And what have we got? It's up a full 2 cents at 39.45. 40.68 to 41.07 is the moving average resistances, but 41.37 is really the 200-period moving average that has been under for quite a while. EEM, is that going to be rallying? EEM maybe turned around a little bit today. Leg E in the weekly, leg C in the monthly, and a leg, it went to a C, it went to a C minus failure. Trading at 30, watch it, because if the EEM is going to rally with a flat stochastic, it's better do that right now, and it better do it by next week. The EM has to be in the 40.90 to 41.20 area. And that I'll say, at least save the day on the shorter term. Hey, we've got that rally coming in right now. There's the E-mini is now up 5.50, and it broke that left side. Up.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm not sure I'll have time to have some of those letters and questions that I had. Let me just do this, and I'll try to get to them as we move along. Platinum is moving up. That was really important for me to see that in the metals department, you've kind of got synchronicity. I do like to see that because, every time gold's rallied and silver hasn't, it's pulled back. Every time silver's rallied and gold hasn't, it's just, when you get the unison, the uniform move, you got that synchronicity. It's really important. And it's very important to see that the dollar is being impacted negatively, which it is. It's gone from 96.12. 96, is that 15? 96.16, let me just change that, 96.16, just a couple of days ago, to where it is now, 95.22. It hit a low this morning just on the 95 level. I said to my subscribers, because we're long the dollar, been long for a long, since the beginning of April, if the dollar's going to hold, it has to hold the 96.08 to 95.08 to 94, 92 area, because if it starts to go under that, close under that, then it impacts that weekly, and the weekly starts to look like a lowercase h, and we've seen these h's tend to break on the left side, on the right side. Okay, so now what I want you to do is say, if bonds are going to be moving higher, that's saying to me that let me tie the whole thing together. That's what I want to do. I'm going to go right now to the VIX index. I sent a little report out to my subscribers this morning on what we're looking at in the VIX index. If anyone's interested in it, it's just very brief, gives good points, and they're points forever. These are points that I use in watching the volatility index, especially at potential climactic moments. I mean, going back to before 1987 crash, I watched VIX for those turnarounds. So it's kind of just my rule of thumb. And every once in a while, remember, thumbs can change from the left side to the right side. As being important depends on what hand you've got, left hand or right hand. But it's important to have those rules. So if you're interested, just give me an email at basilchapman@tfnn.com. Now, this is going to be very important. You see this leg, how often have we seen in the volatility index that we ever get to a D? It isn't often. Look, the last one was back in June at 19.65. And that was a very, very big move, because the market then turned around and it kept screaming to the upside after that, even with those little blips, spikes in the VIX index. And this is way above 1965. It's gone to today's high of 24.52. Let me just put that in so I've got it as a reference point, 24.52. Remember, 3 days ago, I was talking about the 17.36 area. If the Dow starts to trade, and especially if it closes above 17.36, watch out. Well, I think we've had our watch out. But look at this. I'm going to scroll to the left, and you tell me how many times you see a peak D. I see a peak C minus. I see a peak C minus back in April, the April low. You remember the April low where the Dow tested its, went under its February low, the only index to do that in an H pattern. But it went to a peak E back in February of 2006 at 50.30. So it's very rare. Over a year, we've only had two. I don't think there was more than one last year. Look, this is 2000, and yeah, look, there was a B and then a B minus, another B minus, peak C minus, peak C minus. No, it's rare to get those Ds. So I don't look for Ds in my VIX index. When I see the D or an E, like the E at April of 2017 at 1628, I take it into, I treat it just as importantly as anything else, because it's the way, the manner in which the VIX keeps coming down. Trump Comey back in May of 2007, Trump and healthcare back in at 15.6, and that was in June of 2017. North Korea, 17.28. So I treat this very seriously as a potential peak. What do I mean by that? I'm not going to go through all the different points. If you want them, my subscribers got them this morning. You can just send me an email. I'll send it off to you. But most importantly, it's what happens afterwards. So if all of next week we start to see that it doesn't go much higher, but the market is really struggling, as the VIX index comes from the 22s, now it has to go back into the 17s and 16s. If it does that, you're going to see rally in certain sectors. And I would treat them as rallies. Be serious about it, but don't be serious enough to go full out long. For instance, I've got a good email, if I can find that one right here. Got a bunch of them. Let's just see if I can choose this one. No, is it this one? Good grief. All right, I will find them. Oh, it's a pity. It was kind of got to the point exactly. So let me see if I can find it. I don't want to take too much time, because all it is, it's talking about how many people use different methodologies, and certainly for me, it's one. So here's one. Hi, Basil. I've been using your Chapman Wave for years now, successfully, and I've managed money for my clients fairly well, often selling after F monthlies and especially after hat-trick tops. I'm pretty good at spotting bottoms, especially since they are easier than spotting tops. So usually do fairly well getting back in for the next monthly buy mode as well. Sometimes I think I adhere to your methodology more than you do yourself. And that's why I wanted to read it. I want to be blunt. I don't always get these things. There's an emotional effort. I try to avoid it, but it's not always possible. But I always do defer to your prognostications, especially at the macro level. You have what we call a sixth sense. There is the Chapman wave, which we can all learn and implement. And then there is a certain je ne sais quoi that you possess, where you seem to know how the market or index will behave, even when the technicals and the wave count might suggest otherwise. The first time I noticed this was summer of 2011. The S&P and the Dow made a peak D monthly, and the monthly stochastic dipped under 80%, and SPS was down nearly 20% already. So my thought was that we were going back to test the 2009 lows. Somehow you knew it was a temporary blip. Now this is the part that I wanted to mention, which brings me to my most recent failure, the EUR-USD. I thought for sure that the euro has started a new bull phase after the January 3rd, 1917-2000 bottom. MACD was already positive on the monthly, and both the MACD and stochastic made higher lows in January 2017. And when the euro-dollar started leg B monthly in January of 2018, I was convinced this wasn't a single leg A up. My only nervousness came from you a couple of months later when you kept commenting the dollar at bottom was headed back up, and you were right, of course. So how did you know? Thanks for all your wisdom over all the years. So thank you very much, Dan. That's it's a good point. I mean, there are times where the big picture is something that I try to keep in mind. I've been talking about the semis all year, and yet only once do we really get a fabulous 20% gain in the SOXS. Other times we've had small gains, small losses. It hasn't been all that great. And then I missed the last big move down. It happens. I mean, I talked about it, but I didn't get it. So now in the euro, you can see we still have not made a decisive move yet. And really at 1.15, until the euro is trading in the 1.19 to 1.20 area, I don't think I'm going to be able to say that the dollar is going to go down in the monthly chart. I think the euro is a counter trend rally. I think the euro is going to be down. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. Okay, so here's another one. It says, thanks, waiting to put my 401k back in the market, so I will wait your newsletter signal to help me with that decision. All cash except for my trading for fund dollars. Yeah, so you know, what I had said is in your larger accounts, the very long-term accounts, it's still early to be making decisions about taking anything out, even though we're only 5%, you know, lower. We could go another 5% or 8% even, but we don't know just yet. It depends on how big a bounce it comes. A lot depends on the VIX. We're going to a really volatile period. We've got the election. Don't think the election's going to be easy. There's going to be tough stuff. So, yeah, but I'm also going to say that in this case, what I would say to you is make a number. Let's just say you've always loved, I don't know, let's just go. Remember yesterday we were talking about Facebook. Facebook, yes, and thank you. I've got the VIX up. Yes, you're correct. I got my Dana, the one who always corrected me again, that the low of 10.17 back in August was the low. It went to a B minus, pullback. Didn't take that out. Technically, I should still consider that this is the waveform coming from there. But what I did is, if you go to the inside buy mode from the low of 21st of February, we've got a peak A, a peak B, and a little peak C, which is underneath the previous. I want to be as conservative as possible. So this goes D, not C, but D, because that's my new wave count, and that becomes an E. So you were correct. But of course, over the years, I've modified that. I call the inside letters as well. Everything I want to be as close to D's as possible to be preparing for what comes next. I don't want to be at a C waiting for a D and it never comes. And then I look and say, oh, you know, that really had all the characteristics. It was a peak C1, C2, whatever it is. So I'm looking at it conservatively. Okay, now I want to go to I just said I was going to go to something and I didn't. That's a problem. All right. So we go questions. Boeing, let's just do some of the questions. Boeing is running, it's up a full 36 cents at 367.83. It got clobbered from 394 down to 359. You know, 50 points, that's big for Boeing, but look where it's come in the shortest period of time. It took it out in a longer period of time. So this is leg D, probably a peak D in the weekly. I'm going to do this in a moment. We're going to have a break. And then for the final 5 minutes, I'm going to talk about the monthly charts because tomorrow's Technical Friday. I just want to prepare some of that. So here we go. Boeing, peak D daily at 394.28, peak D weekly if there's no new high this week. Leg G/C in the monthly chart, technicals there are weakening a little bit, but still very strong. The weekly technicals are very poor. Next question is, let me just run, AA, no, it wasn't AA, it was American Airline, AAL, right? AAL, 31.79 up 18 cents. Just took a huge beating. Oh, did I change? Oh, A, B, C. Nah, wait a minute. American Airlines, yeah, I think this is what it was. It had this crazy top going to a peak C in the monthly chart, and then it tanked. It goes to about 58. Now it's trading at 31. I see nothing. Was that the question? Surely that couldn't have been the question. Yeah, it's up 1%. Well, now it's at 50.55. No, I see nothing in AAL. And if you're looking at crude oil, did I forget crude oil? I did. Nobody reminded me. Crude oil is down, when I last looked. Yeah, crude oil is now it's down 1.63 at 71.54. Made that peak G top at 76.90 back around the 1st of October. Trading now down quite a bit. I've got this as an alternate count F/B in the weekly and a leg E in the monthly. Don't get confused. That leg in the E monthly, look at where it's come from. It was once in the 200 area, then it was down at the 70s, then it was up at the 120s, and then it goes to 39.19 in February of 2016, and now it's at 71. Is that almost a double? So it's working its way higher, but just steadily moving higher. It hasn't broken down, hasn't broken up. It's just steadily walked the 9-period moving average in the monthly. And I say, until crude oil takes out 66, absolutely key support, I think it can just chop in a range right now. Okay, next question is, so that impacts the IYT a little bit because of the airlines, and the IYT right now is up 27 cents, having gone from a peak E back at 200, I think it's 208 or 209 back in mid-September. It plummets down to today's low of 188. You know, this just says it's going to take a lot of time. It's the same. Look at the monthly chart of the iShares Dow Jones Transportation Index. Look after that leg F. Look at that move down to the 14-period moving average so far this month. Look at the IYM. Keep your eye on the right side chart, the monthly. Look at that. Same thing. So right on the 9-period moving average, and the MACD is about to turn down. Stochastic still good at 87%. Wow, what happens for the rest of October is going to be really important. DAL is the question. DAL, Delta Airlines, made a peak A, B, C, C1, C2. Well, it's not a good candle. And the weekly chart, you know, it's trading up 4.77. So there's some news, I'm sure, but I can just tell you that Delta's stuck between 56s. If it closes below 49, it is going straight to that 48.5 low that was made back in the beginning of July. I just don't see very much there. There is not much there. Bob wants to know about the XLI. Let's do the XLI. Industrial Spider Fund. Look at that one-to-one extension to the downside. Makes an all-time high back around the 17th in the 80 area. Trading right now at 74. Low of the day, 74.08. This is not good. A peak D in the weekly. That double top in the monthly with a failing right shoulder. This is called a Chapman wave right shoulder failure pattern. Also a double top, cup formation. This is a problem. And I'm not going to tell anybody, any of my subscribers, to rush in and buy. If I get, I said just quickly about the VIX index. Once again, if you want the rules, 5 or 6 rules that I have that I really stick to quite closely, for the VIX to have rallied today instead of spiraling up into the 2831 area because the Dow was down, the futures were down right at the opening, 350 to 400 points, and the S&P was down 30 points. That says to me, that would have said to me by Friday or Monday, we could have got a kind of a tradable low that could have taken us sharply higher and lasted a little, not quite as long because we're coming up to the November election. I think everything's going to put a cap on the upside. But we could have got whopping gains in really beaten down favorites that fund managers wanted to get in. Now it's very different. Why? Because within the context of the VIX, you've used up some strength that it would have, strength to the upside, weakness to the downside. They would have allowed for a really sharp reversal. Right now, we could have had a major low and by about 2:30 to 10 to 3 this afternoon, you could suddenly see buying come in, and that buying could have come back almost all the way if it started earlier. And the VIX actually pulled back to the 18s from the 2270 right now. And the Dow closed up above 25 points or more, 30 points or more. That would have been a major turnaround for a whopper of a move up in a counter-trend rally. Now I think we're just going to use the VIX for usurping energy and going nowhere fast. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So I got a whole bunch of questions coming in. So let's just deal with the questions because that's what we're about here at TFNN. The first question was, Hector wants to know, radio show question about Snap. Snap, of course, is Snap Inc., and it is trading right now at 6.76. Yes, it's the first green candle. In fact, this looks like yesterday's E-mini 2-minute chart. Look at this. No, I don't want to waste time. So it's trading at 6.75. This is exactly, if you look at the monthly chart, this is exactly the Snapchat online. So this is exactly the opposite of what you want to see from an IPO. Does it have the potential for a Facebook that came out? You remember it came out really strong, and then only when it got to the 18s did it find support. This is there's a different story. For Snap is no Facebook. So I'm just looking at this and I'm saying I would be really careful. I give it a little time. It's a 677. If it is going to move up, it has to do a whole bunch of things first. So I'm going to say, if you're in for a really quick trade and the general market turns around by Friday or Monday and you're starting to see up 120 on the Dow, then up 60, and the next day up 190, that's going to be really good for at least a week maybe, or a week and a half. Snap should rally then as a short-term trade maybe. But if you're looking at an investment or anything more than a bounce, Snap is not there for me yet. I see no sign yet of it being able to sustain a rally unless there's some news that takes it to 7.88 or higher in 1 or 2 days, and then it has to hold 7.40 to 7.30 support. So just be careful. Don't dive into the worst. In the counter trend rally, find the ones that are low price that have been really good and just want to have a good snapback. Then you get a good low cost snapback percentage, good move. Next question. Yes, so the question is about listening to your show. What do you say about notes that I have on peaks? No, this is on the VIX. It's got nothing to do with what the VIX is doing right now. It has to do with my rule of thumb for the VIX index, what to watch for very closely when you're looking for some kind of big turn in the market and you're following the high VIX. And that's really what it's about. It's like 5 rules just to watch them closely. It could be any time of the year, but now is appropriate for the VIX. Hey, stay tuned for Steve. Stay tuned for Dave. I'll be back with Tom O'Brien later this afternoon. Have a wonderful day. Hope to see you back here tomorrow. Dow's down 150.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.